Good afternoon. Here are my views on monetary policy. RBI has taken a very bold stance by staying accommodative and deciding to wait for a few more months before turning into neutral. This was clearly crucial for the economy at this juncture, since we are it is important for the recovery to be durable and resilient before any further withdrawal of liquidity is taken from the economy. As of now, although few steps like VRR and variable rate reverse repos or 14-day tenor as a main liquidity management tool and on-tap liquidity management extension to the health and contact intensive sectors will prove very effective in managing the liquidity, especially management of the domestic debt market, and ensure the adequate availability of funds for the government borrowing as well. We need to also, but at the same time, we cannot ignore the demand side risk. The rural demand still remains muted, and the demand even in contact intensive sectors remain muted. And the RBI has projected a growth rate of 7.5% and major increase in the growth rate during the first quarter, and subsequently a lesser growth rate in the remaining quarters. Now, clearly it is due to unfavorable, some base effects are making changes and making a higher prediction of growth rate in the first quarter vis-a-vis compared to the quarters to follow. However, also with the fading Omicron fear and muted supply side constraints during this period will add to the higher growth in the first quarter, I believe. Also, at the same time, we cannot ignore the inflationary upside risk, as we still continue to face higher inflation both at domestic and global level. At a domestic level, we clearly have concerns regarding food inflation and services inflation, and the same is accentuated by the domestic crude oil prices and metal prices at a global level. So commodity prices have remained volatile at the global level, and we need to, and with central banks across the world turning hawkish and increasing their interest rate, we are clearly running a risk of the depreciation of currency, domestic currency. So hence we have to be more cautious in terms of the inflationary risk, and but clearly the RBI remains focused on its objective of pushing the growth and fiscal coordination as much as possible, because once the demand pulls up, it will be easier to RBI to start neutralizing its ultra loose monetary policy. So, and growth and inflation have always been a dilemma for economists, but at the same time we have successfully been able to keep the inflation in a target range of 4 to 6%, and inflation projections the inflationary expectations also at the same time, alongside the projections of January 2021 IESH 2021 survey shows that the inflationary expectations are lower vis-a-vis compared to the previous year the same time. So I think it is a good sign, and RBI has taken overall a very good decision for a sustained recovery and durable recovery in the coming times.